Hello, chart watchers, and welcome to this Friday, April 12th, 2019 Market Watchers Live Show with your hosts, Tom Bowley and Mary Ellen McGonigal. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Let's take a look at the market this morning. We got the Dow Jones Industrial Average up over 200 points. The S&P 500 up 13, now above 2,900. Keep in mind that all-time high is near the 2,940 level. The NASDAQ up another 20 points, 79.67, zeroing in on that 8,000 level. The Russell 2000 was up much more earlier today, has pulled back, but trying to get back through that 1,600 level. Currently, Russell 2000 up about 2 2/3 points. 10-year Treasury yields up 4 basis points, 2.55%. That is a key level. We'll look at that in just a minute. Volatility index continues dropping, 12.41. That is now down another 5% today, or close to 5%. This would be a low for 2019 on the volatility index if we close where we are today. That's very bullish for equities. Financials leading to the upside today. A number of banks have reported. You can see the move up, trying to get a breakout on the XLF, getting close to a breakout on the bank index. Investment banking also doing very well. Investment services. You can see the big move up here. This would be a very significant breakout if we can close above 1140. So that will be worth watching. Broadcasting and entertainment getting a big lift today from Disney. Disney came out and announced their streaming service that's going to compete with Netflix. It's the Disney Plus. Stock up $11. The key here is that Disney is pricing it well below Netflix. And remember, Netflix raised their streaming service price earlier this year. Anadarko Petroleum, definitely in the news today. Chevron came out, said they're going to pay $65 a share for the company. Also, Occidental Petroleum interested in APC, so they're reviewing their options. Stock, you can see on APC, up almost $16 today, or what's that, roughly 35% or so. Pretty big move on Anadarko Petroleum. Okay, it is another Friday. We'll certainly be getting into what's hot, what's not later, but welcome to the show, Mary Ellen.
Hello. Great. Thank you. Good to be here.
Yeah, always good to have you in here. A lot of good information. We're going to go over a new segment. I think it's a perfect segment since we have Mary Ellen on the show. But we'll talk about that in just a couple minutes. But I'm excited with the Masters.
Yes.
I was just going to say, still a little disappointed in the poll yesterday that only 37% thought that the Masters was the best golf tournament. So don't know.
Well, they're just not informed. I think they all went home and probably watched it and are now true blue fans.
Yeah, I know I watched it. There's some pretty interesting storylines developing down at the Masters, but I'll save that for friends to talk about on the weekend. I won't bore everyone here on Market Watchers Live. But we do have a good schedule today. Again, like I said, Mary Ellen joining us. We'll get into the what's hot, what's not a little bit later. But first, let's go over the upcoming schedule. Tuesday, we'll have Aaron's workshop. Then we got Tom McClellan coming in on Wednesday, return trip there. And, of course, Julius DeKempenaar will be in on the 18th, next Thursday. He is going to sub for me. I will be out next Thursday. So Julius will be joining Aaron. So look forward to that. And then next Friday, Mary Ellen, you and I won't be here because the stock market closed.
Yes, indeed. A long weekend coming up, and I'm going to miss it.
Everybody can relax. It's Good Friday, market closed, so we're not going to have any live shows here at Market Watchers Live and on Stock Charts TV. So just mark that on your calendar. Make sure you're aware of that. As far as today goes, as I mentioned, we're going to get into the what's hot, what's not. That'll be 30 minutes of a lot of action, things that have been working past week, things that have not. And we'll get into the 10 in 10. Anthem Inc. will be our first stock symbol, ANTM. Check that out, see if you agree with me, and then we'll go through 9 other stocks and annotate those. And then, as I mentioned, we got a new segment, Technically Wrong. And, you know, one thing that kind of made me think about this is yesterday I got stopped out on a stock that I owned, IVC, which I really liked. Technically, it came down to gap support. I thought, okay, here we go. It's going to be perfect. And then it broke down below gap support. And so technically it looked pretty good, but it ended up breaking down. I took a loss and got out. So I was thinking, well, what about stocks that don't look very good technically, but still could represent great value going forward? And I know we don't take too many looks at stocks from a value perspective, but that's what this segment's going to be all about. So Mary Ellen, because she's got so much great fundamental data to share with us. She's going to give us some stocks that fundamentally you would think might be pretty good, but technically they have not been responding. So we'll look at those charts and we'll talk about it during that final segment. All right, but let's go ahead and get started today. We had one economic report out earlier today, and that was the April consumer sentiment, 96.9 versus 98.0. So it was just a slight disappointment. Nonetheless, though, we've got a positive response in the yields, folks bailing out of the treasuries. And after pulling back, we had a move off that earlier low down around 2.35%, got up to about 254, pulled back into the 240s. And now we actually put in a new short-term high, getting back to 255. If you recall, that's where we broke down. That was that original low back in early January, 2.55%. We stayed above it for the next maybe the next 10 weeks, and then fell below 255. Now we're testing that area again. Continuing movement to the upside, I think, would be extremely bullish for not only the yield moving higher, but also for equities as money rotates away from the more defensive treasuries. Something to look at, keep in mind. As far as earnings go today, this is really what I consider the kickoff to earnings season. We have a number of banks, big banks, reporting their earnings. You can see those numbers right on your screen. They were all pretty good on the bottom line. I got to say, JPMorgan, big beat there. Having a good day today. We'll look at that chart in just a minute. Wells Fargo beat, PNC beats, and First Republic beats. The one disappointment in there was non-banking related, INFY, Infosys, where they just matched expectations, 13 cents, and the stock was pulling back a little bit today. But let's take a look at that first stock, JPMorgan, and see what it looks like on the chart. And I've got my relative charts up here, so you can see JPMorgan moving to a 2019 high clearly. Stock now up over 4.5%. That's a big move for JPMorgan. You can see over the course of the last year, the high's been around 116, the low's been around 90. So as far as Wall Street stocks go, this is a fairly tame stock. And honestly, without that one big drop here in December, if we had just held around the 100 level, you can see that's not a very wide trading range, 100 to 116. So JPMorgan, though, moving up, looks very good. Nice volume coming in. Now the question is, do the banks continue to move up and end this relative downtrend that they've been in? Part of that, I'd say a large part of that, is going to depend on what happens with the 10-year Treasury yield, what happens to spreads. If they continue to move higher like they are today, then I think you're going to have a banking group that's going to continue to recover, and probably a group that's going to do very well for the balance of the year if we have hit the low on the 10-year Treasury yield, something to keep in mind. Other banks that reported, Wells Fargo. So let's pull WFM up. Okay, not sure. Oh, WFC, never mind. That was the old Whole Foods. Don't really need Whole Foods. That's part of Amazon now. So here's Wells Fargo, not getting the same type of reaction. And if we pull up that relative chart, I think you'll see that this has not been a very good performer relative to the banks. So even before today you can see a huge relative decline because banks are up and Wells Fargo getting a negative reaction. But you can see over the course of the last few weeks, Wells Fargo on a relative basis was falling out of bed relative to the banking index. So this was not a good looking stock going into the report. And even after beating on the bottom line, you can see there's been a lot of volume leading up to the report today. And today after the report, already over 40 million shares have traded. We're not to the halfway point of the day. So if you look back over the course of the last year, this is very likely to be the heaviest volume day of the year. And currently, we are trading at about a 3.5-month low, close to the low in 2019. So unless we get a big reversal into the end of the day, I would say that this is a pretty bearish development today with Wells Fargo. PNC Financial, of course, ticker symbol PNC, getting a pretty positive response. Not as good as JPMorgan, only up 2 2/3%, but challenging overhead resistance. A close over 132.5 would be the first one in 2019. So let's watch, see if we can get that breakout there. On a relative basis, we have been moving up on PNC over the last 6-7 weeks, but still got some work to do to take out that triple top, that triple relative top that we saw back at the end of 2018 and early 2019. How about FRC? This is First Republic. Another one in the banking space, gap down earlier, rebounding. Now, this is a stock that actually recently in the last 6 weeks was challenging an August high. So this is one that's been in an uptrend relative to the banking group, but it has been moving lower today. I'd like to see that actually turn around before the end of the day and start to turn back up again. But nice hollow candle. So if we can hold, get back through gap resistance, perhaps FRC has seen a bottom in the near term. INFY was the non-bank related earnings report that came out. You can see the stock getting hit pretty good to the downside today, down about 3.8%. I would be watching right in here about 1040, 1050. That's the area where we seem to be bouncing off of so far today. If we lose, I'm going to say 1040, I think we could go back down to the top of gap support closer to about 1010. So those are two key levels to watch on INFY. All right, Disney. Now, Disney did come out with their streaming service. Well, they haven't launched it yet. The product actually launches on November 12th, I believe. I was looking for the date. Yeah, it looks like launch date is November 12th. Their streaming service, Disney Plus, is going to be streaming at $6.99 a month or $69.99 for a year. So that is very favorable versus Netflix, which recently raised their price from $11 to $13. So Disney is almost half price. Now, if you're wondering, okay, what do I get for that? Well, Disney's including 18 of their 21 Pixar films, most of their Marvel films, 30 seasons of The Simpsons, if you're a Simpsons fan, the Disney movie back catalog. So you've got Snow White, Lion King, Bambi, and those movies. Recent Disney movies like Frozen, 5,000 episodes of Disney Channel shows, and 100 Disney Channel original movies. The key here is no sports, so that might be a problem for me. No ESPN, so you got to get ESPN Plus for that. But still, it is very competitive versus Netflix. You can see the huge breakout with massive volume that we are getting here today on Disney. And if you look at Netflix, Netflix is heading in the opposite direction, down about 4% today. I think you talked about this one yesterday, Mary Ellen, but Netflix was on fire the first half of January, and now it is currently trading right where it was about 3 months ago. So it has not gone anywhere, and this news is not helping for sure.
That's it. Then, yeah, that news was out there. And then Amazon, of course, another competitor with their streaming.
Yep, same thing. I mean, so Netflix, they've kind of, they're ahead of the pack, but they're going to get a lot of competition. And I think that's what the market's trying to price in right now. Is Netflix going to hold on to the majority of its customers with the much higher price? Is there that loyalty there? Or might they lose some of their business to Amazon and to Disney? Last story I wanted to bring up, Chevron came out with an announcement that they are looking to acquire Anadarko Petroleum for about $65 a share. And CVX, you can see, as an acquirer, when you're issuing, I think the offer price was both cash and stock. And when you're offering your stock, then there's a dilutive effect usually. So the acquirer many times will see exactly what Chevron is seeing, which is a move to the downside. In the meantime, we've got Anadarko Petroleum, APC, with the huge move up, getting close to that 65 level. Occidental Petroleum also came out and said that they were thinking about Anadarko Petroleum, and they're considering their options, quote unquote options, whatever that is, and the stock is down. So I think maybe investors not happy that they didn't make the acquisition attempt. But anyhow, that is all I have. Mary Ellen, I know you're going to go into IPOs, and there was a big one out recently, Lyft.
Mm-hmm.
But Lyft needs a lift.
It certainly does. That stock has absolutely plummeted. And for those of you that have not been following it, the stock IPO'd, it got as high as $88, but then it has now pretty much plummeted. It's down at $59. It's down 35%. Some people are a little bit of bottom fishing here today, but not a great looking chart at all. What I'm going to do is go ahead and start with Facebook and just give a little bit of a idea as far as these IPOs that are coming out. We have seen a ramping up. Last year, 2018, 190 new companies IPO'd, and that was up from 160 in 2017. They're looking for even more this year. So Lyft, Uber is due to come out. There's a company called Zoom that's widely used. A lot of high tech and just innovative ways to do existing products and services are IPOing this year. So it's pretty exciting. What I wanted to do with Facebook, because it takes us back so far in time, I'm showing you a monthly chart. They IPO'd back in 2012. So that's right back here. And this is a phenomenon that happened with Facebook, with PayPal. You can go back to any of these big winners. And most successful IPOs, what they will do is come out, have that initial burst. And remember, this is a 1 month bar here. And then oftentimes the stock will decline. After that initial burst of excitement, it will decline. Mark time while investors get tuned in to the company, and perhaps the company gets their act together in the way of earnings and sales. And for when you are investing in IPOs, oftentimes the best time to enter it is when that stock comes back to that prior peak that was reached in that initial period. That's when you want to get involved in the stock. We can see with Facebook subsequently just how much of an uptrend outside of this more recent period, but this is really what you want to look for. So I'm going to take us through a couple of stocks that are more recent IPOs and just give you a sense of where they are now. This first one is a company, it's called Yeti, YETI, and what we are looking at here is a daily price chart. These guys IPO'd last fall, so this is November 2018. I talked about that initial burst of excitement. Sometimes it will expand over a 1 month period, sometimes it'll be shorter, but we can see that the stock did dip subsequent to that. Now, of course, this is market related. We did have a tough period in the broader markets, but the same principle applies in the sense that the stock subsequently in January had a rally attempt, but it's not until we peak above this prior December high as an investor where you could really take advantage of a subsequent up move. Now, what happened here, of course, was a gap up at the end of February. Company reported 375% year-over-year earnings growth, still very much in a confirmed uptrend. Let's see if I have a couple of other examples that we can take a quick peek at here. Okay, let me just see if I can go over to this other window, and I did have a couple of other marked up charts here for us to take a look at. And if that does not work, I will go ahead and just pull the stock up. Another IPO that came out this year, SMAR is the ticker symbol. We'll go ahead and pull this up on the daily and give you an idea of where we stand. So SMAR, this is Smartsheet, and the company IPO'd the end of last year. So here we are with that IPO. We can see that initial euphoria, if you will, where the stock has a nice advance. Now, this is a period where the stock attempted to go above this prior high, but it failed. So it's not until we get over to this more recent February period where the stock is actually entering into a period where it is above that initial euphoric phase and the stock enters into an uptrend. And one last name that we can take a look at is IIPR. This is a REIT stock that deals with cannabis industry, medical marijuana. And this is another recent IPO. And we can see that the stock is very much in a confirmed uptrend here recently. And the stock, let's see if we can, well, it certainly was not until this period here where it did overreach that prior high, and the stock is in a confirmed uptrend. So I'm going to go ahead and leave it at that, and then we can go ahead and move on to our next area and take a look at recently what's gone on over the last week.
Yeah, we can jump into the what's hot, what's not. I tell you, we got into that December period where everything was so weak for a while, and since then it's been almost what's hot every week, hasn't it? I mean, this is what, 12 weeks in a row.
It's really been unparalleled. Absolutely. And I know Q1 was the best quarter. You'd have to go back to 09, Q3 09 to get a quarterly result as strong as last quarter. So certainly been very, very strong. And more recently, we've seen, I'm going to go ahead and start with as far as what was hot this week. We've seen some big moves in aerospace defense stocks. This first name that we're looking at is Coda Octopus. And what's happening is last month, Trump came out and proposed an increase in defense spending up to $750 billion for fiscal year 2020. It's a solid 5% increase from the existing budget, and it has a lot of analysts excited as far as prospects. Now, this particular company is fairly unique. They develop underwater technology for mapping and defense. So it is a new defense related. They do a lot with 3D imaging, and we can see the big move. The stock is up 18% on the week. So it broke out of this base. Not real easy to see, but it was on significant volume. The stock's very much in an uptrend. RSI is trending upward. And then your MACD had that black line up through the red, positive crossover. It's a bit stretched here. We can see by this RSI that it is in an overbought position, but certainly in an uptrend. Let's take a look at another defense-related stock. This is ESLT, Elbit, and we can see this big gap up here. The stock is up 4% this week, and really it's on analyst upgrades, and the stock doesn't seem to get a lot in the way of volume. When I see these kind of gaps within the prices action, you can see it, but it is very much in an uptrend. We can take a look at HII. This is a better known Huntington Ingalls, and this particular stock, this is a turnaround story, and they do seem to now be possibly getting it right technically, because the stock has broken up above this 200-day simple moving average. Your RSI is trending upward and in positive territory, as is the MACD. So if we can get a little more volume on this upside break above that 200-day simple moving average, we can feel comfortable that this turnaround is taking hold. And then another name that we can take a look at is well, let's see if we can, I can move on otherwise, but MOGA is the ticker symbol. I know that they do have, oh, it's /A because they have A and B shares. Pardon me, /A, and I'm just not getting that. So if you want to take a look at that, I can go ahead and move on to other areas, because there certainly are. Retail auto parts were super strong, and this was not the first time. This is ongoing here. The first name we're looking at here is AAP, Advanced Auto Parts. And auto parts, this is interesting that these stocks are really doing well. There are a number of them, and generally they do act well during periods of uncertainty. It's a defensive type area. Individuals are not buying new cars. They want to fix their existing cars. So the fact that these stocks are outperforming is a little bit perplexing, but they do have numbers. This one, it is on its way to breaking out at 186. It will be breaking out of a very nice 5-month base. Your RSI is positive, as is your MACD. The company announced a recent partnership with Walmart, which is helping them. We can take a look at AZO, and this is another one. Take a look at this super strong uptrend. Unbelievable. All started here with very good earnings. Analysts are continuing to revise their estimates higher for this retail chain AutoZone with auto supplies. We can see that it is and has been for quite some time overbought, but very much this is your 10-day simple moving average. Stock is finding support at that upward moving average. So very, very constructive uptrend there. We can take a look at Orly, another retail auto parts store, also in a very strong uptrend. RSI is positive. It's a little bit overbought here, but your MACD had that positive crossover and is trending upward. This is the largest by way of market cap of the group. They reported earnings in early February and really are just on a tear here. So let's take a look, and that is not the correct ticker symbol, CPRT, this one last auto parts stock, another one very much in an uptrend. These guys do online auctions and vehicle remarketing, and it's poised to break out of a very long base here and could even continue this uptrend. Let's go ahead and move on. I just have a couple of minutes because I want to get into some of these oil and gas equipment guys. We can take a look at NOV. This is National Oil Well. Now, unfortunately, it is getting hit today. So let's go ahead and move on, because what I was on the prowl for here was potential turnarounds. This is OII, Oceaneering, and a little bit of a better position here. It's up 3% for the week. So it's trying to reverse this downtrend. I'm not going to be interested until it breaks up above that 200-day simple moving average, but you may have a run from 16 to 20 until it hits that resistance. RSI is positive, as is your MACD. Very quickly, I'm going to cover a couple of these software stocks that really were on a tear this week. This is OKTA. They are in the software security space, and we can see the stock is having it's broke out of this base and it's continuing to advance. RSI is trending upward and is positive, as is your MACD. We can take a look at one other stock, and I'm going to have Tom give some good words here. This is another security software. This is CyberArk, so it's cybersecurity. Very clear-cut uptrend here for the stock after this gap up on strong earnings. The stock remains in a confirmed uptrend. RSI is positive, MACD poised for that positive crossover. So, Tom,
all right. Yeah, we'll just keep it going here. I'm going to move over into the financial area. So this is a sector summary of the last week. So I've gone back 1 week, and you can see financials right on top, almost 2% higher, whereas communication services is the only other sector that's up 1%. So we're clearly seeing money rotating a little bit into the financial area, and it doesn't hurt that the 10-year Treasury yield's been moving up and helping this group. Now, if we click on the financial sector, we know banks are having a really good day today. That's why on a 1 week basis, they're up near the top. But prior to today, they really were not having that stellar of a week. It was okay, but not great. But look at some of these insurance stocks. So you got full line insurance, you got reinsurance, life insurance, nearly 2% this week as well. So those are the three areas that I want to focus on in terms of at least this area of financials. Asset managers, also investment services. You can see that those areas having strong weeks as well. So let's take a look at some of the stocks within these areas. First is Kemper Corp. You can see Kemper Corp off a beautiful uptrend in the early part of the year, went up and hit overhead resistance. And I think now putting in the right side of a cup, and look at the volume picking up on the right side of the cup. I think that's very bullish. The group overall has now broken out to about a 6-month high, and we're starting to see some relative strength coming in here over the last couple of weeks. If we could get a breakout on the DJUSIF relative to the S&P, if we could clear that January high, and you get a stock like this that's been consolidating in a very bullish pattern, get a breakout, Kemper is one certainly to keep an eye on. AIG, also a very, very strong week. Look at the breakout here. Sideways consolidation. We've been struggling to get through $44. Well, we did it about a week ago, came back, couldn't even get down to that 20-day moving average and broke out again. So AIG, and keep in mind, too, that we went straight down. And a lot of times when you go straight down on the way down, sometimes you go straight back up on the way up. And now that we've got this breakout, I think AIG looks good. RNR. This is a Renaissance RE Holdings, sideways consolidation after a breakout. This week's been very strong, nice breakout, increasing volume. RNR looks good. RE, Another one in the insurance space, Everest RE Group. Now, this one's had a good week, but it does have overhead resistance, rather significant overhead resistance at about 230. We got a triple top here going back over the last 8 months or so. So we want to make sure we can get through that. But the stock currently having a very strong week and at least heading for maybe another test. UNM, this is Unum Group. Sideways consolidation, this gap down that we saw back in May, we have really struggled to get back through $40, but the group is definitely picking up. The stock is picking up. I think we have a chance to maybe at least make a run for that $40, and then we'll see if we can get through. And then finally, ING, among the insurers, you can see this one off of a move up in January and February. A little bit of a, I wouldn't exactly call it a perfect cup, but definitely a little bit of a rounded bottom and then movement back up to challenge that earlier high. I think ING looks rather interesting here. Moving on to asset managers. How about Legg Mason? What a week we've had in Legg Mason. Last few weeks, really. Huge moves to the upside. Look at the volume coming in. This is a stock that had been under pressure for quite some time, and we could probably draw a neckline coming across here with this being a left shoulder, this being a right shoulder, and a breakout with increasing volume to the upside. If you do that, you're looking at about 31 down to 23, $8. Measurement would be initially up to $39. We're currently trading at 32.78. Legg Mason looks very interesting. Federated, FII, Federated Investors, another one over the last 3 weeks, really on fire. This one, though, is well above prior highs, and you can see that the group asset managers finally moving higher to about a 6-month high, and this is one of the best performing stocks in the group. So if you like the financials, if you think they've been underperforming and they're ready to move, I think FII is a stock to consider, especially on a pullback. IVZ, this is another asset manager, another one that's broken out recently above the earlier highs, this time in March. We are moving higher through that. And again, asset managers doing well, starting to see some relative strength, but the group has some work to do versus the S&P 500. I think if we can get through about 0.068, I think that would really start to turn the tide here, because you do have a double relative bottom. And if you take out that high in between, I think that would be very bullish. Last group, investment services. LTS has been on fire, breaking out above the January high. So a huge move in January, consolidation, and look at the volume pickup on this recent breakout above about 320, 325. LTS looks good. And the last one I have here is Morgan Stanley. After sideways consolidating, really struggling to get through $45. Look at today's action, up 4%. Volume picking up, making the breakout. I think this one has a change of character on the chart. I think it was downtrending. I think it is now beginning to uptrend. Morgan Stanley, one to keep an eye on if the financials continue to outperform as they have this week. All right, back to you, Mary Ellen, for some more What's Hot.
You bet. And of course, it's always good to see the financials doing well and participating in the markets. So we look forward to that.
I've seen that for a while.
Right, right. And here's another area. This is a sector group graph for consumer staples, tickers XLP. And this is another area that is surprisingly doing quite well, given the area or the period of the market that we are in. A lot of high growth stocks are really standing out, but consumer staples have come back into play here. And we're going to take a look at a couple of these names, and I think you'll be able to see pretty quickly why. So this first area is food products, and a lot of these stocks, this is ticker symbol CAG, Conagra. I'm going to blow this up just a little. And a lot of the companies that are excelling, certainly over this last week, are these turnarounds. These are companies that fell way out of favor, poor earnings, food products. Some of them could be whether it was meat pricing and so forth. But this company, they came out this week, right here on Wednesday. Management reaffirmed their strong guidance, said that they expect to see positive growth after the spinoff of Lamb Weston. So the stock is responding. Now, we can see that it does still have work to do before this downtrend is reversed. We want to see this blue line is your 200-day simple moving average. We want to see this price break up above that on volume to confirm this turnaround. We also ideally would love to see this 10-day simple moving average cross up above that 200, a golden cross. We can see, given the move that it's had here recently, the stock is clearly overbought, so it may take a little more work or time, but before we get involved in that, we would want to see that break up above. Let's take a look at another stock in this food related place area, CPB. And this is Campbell Soup. I'm going to go up here, see if we can pull this up. And this is another company that is in the throes of turning around. A lot of these companies in these consumer staples space did have difficulties with pricing, and with now they're coming into a place where management is shaking things up. At Campbell Soups, they have sold their fresh food units. They're doing a lot in the way of cost cutting. And then also in the executive suites, they are cleaning house a bit, and analysts like it. So the stock has now more recently broken up above these key simple moving averages, giving it more room to advance. Ideally, if the stock does come up to this 42 level and break out, that would be even more bullish. But right now we are in an uptrend with your RSI and MACD in positive territory. Another food stock that we can take a look at is Sanderson Farms, SAFM. This company is in better standing, and it also is a turnaround story. Analysts continue to raise estimates. They're looking for 106% year-over-year earnings growth this year, 42% next year. We can see this nice move up that the stock is having. It is a little bit extended. I would be a buyer on a pullback. Your RSI and MACD are quite positive. However, we can take a look at PPC. This is Pilgrim's Pride, and this is yet another stock that is doing quite well. It's up about 5% on the week. Analysts are continuing to raise earnings estimates for this stock. And interestingly, now the stock is hitting a near-term high in price. We can see again that this RSI is above this net neutral 50, trending upward, and your MACD is also in positive territory. This is another one where a pullback would be healthy, and but the uptrend is very much intact. Another one that is more recently doing quite well is General Mills. So GIS is the ticker symbol, and you can see again, this is all about a turnaround story. They came out here. This is at the end of March with strong earnings. This is a company that yields 3.8%, and they are a leader. Management came out, talked about their leadership in cereal sales, but they are continuing to grow their pet food product area. That is a very strong growth area for the company, and analysts are raising estimates on this one as well. I'm going to just pull up a couple because I do want to get on to another area, but I think you can see thematically what's going on here with a number of these companies coming out of really tough periods. They're turning things around. This is JM Smucker Company. SJM is the ticker. Their big growth area here is coffee sales and also pet food through acquisitions. And they have just signed an agreement with Dunkin' Donuts to provide the K-Cups for coffee. We can see the stock is a little bit overbought up here above this 70. It can remain there, but it is going to be with an eye toward a pullback at some point. But the turnaround is very much in place here, and another nice yielder. Let's move on to another area, and that would be retail home furnishings. So for those of you that follow the markets closely, you may have noticed that a couple of select retailers have really been doing well. But this past week, the home furnishers came on. This is a company, RH. They were known before as Restoration Hardware. This stock was a big winner last year. I'm just going to pull up a weekly here so that you can see this is taking us back to 2017 into the middle period of 2018. But more recently, the stock has fallen out of favor, and they are bucking the digital sales trend, going more into brick and mortar. Analysts don't like it. This is the gap down. The company came in with really good earnings, but the outlook was ever so slightly disappointing. The stock got punished. More recently, it is trying to turn, but I would not be a buyer of this stock. These moving averages are trending downward. It has far too much work to do, but it is up 15% on the week. I think I have time for one more stock here. This is Tempur-Pedic. TPX is the ticker symbol. Take a look at this gap up. Now, this is a surprising reason. Usually it's going to be earnings, but this gap up is on news that the CEO is exiting. He had a very rocky relationship with senior executives. He's out. Market likes it. Stock gaps up. And it is also in a confirmed uptrend. And another name, Lazy Boy and Ethan Allen, also look quite good with analyst upgrades. You can take a look at that. I'm going to turn it over to Tom for some more.
Yeah, we are going to move into what's not. So spend a lot of time talking about what's hot. You can see there were definitely a number of areas that were hot over the course of the last week. So what is not hot, or what has not been hot? Well, I know Mary Ellen's going to be talking to you, giving you a number of healthcare companies, so I will avoid that. But real estate, you can see, also has not been very hot. And if we go into the consumer discretionary area and pull up the sectors there and scroll down over the last week, you will see some of the retailers that are not exactly very hot this week. And, before I even get into that, I don't know if you saw, Mary Ellen, some of the back and forth action that was taking place on, with the retailers. I think yesterday, Jeff Bezos from Amazon came out and said, hey, we want our competition to match our employee benefits and our $15 minimum wage. And did you see some of the responses?
I did not, but I would love to hear it.
Here's Walmart's Dan Bartlett. He says, how about paying your taxes? Yeah. And then Macy's CEO, Jeffrey Gannett, came back and said, we decided to put tax savings back into our community of our colleagues.
Wow.
And CEO Devin Winnig fired back and said, we don't compete with our sellers. We don't bundle endless services to create barriers to competition. So
wow,
what Bezos was looking for, but I think he got more than he bargained for when he
got slapped on the wrist. And I've heard horrible things about the working conditions there, that my daughter was, they were trying to get her in there and she wouldn't have it. Hearing from other people, the conditions, your workhorse.
Yeah. Well, I think Walmart's CEO has got a point. Dan Bartlett, he said Amazon had $11 billion in profits and paid $0 in federal taxes.
Oh, boy.
So, Hey, you know what? If you're not paying taxes, maybe you can afford the $15 minimum wage. I don't know. I don't want to get in the middle of it, but I just thought I wanted to share that. But retailers were a little bit weak this week, not necessarily because of that, but apparel retailers in particular. So let's go over some of the stocks that were definitely struggling here over the course of the past week. Some of these stocks, by the way, when you in an uptrending market, when you get a pullback and they're not performing, they can actually give you some pretty good opportunities. So here's one in the REIT space. AHT, big move up, looks like a cup, pull back on a handle, lighter volume, testing that rising 20-day. We'll see what happens from here. BHR, another one that's been very, very strong in the REITs. Huge move up, pulls back, hits the 50-day, goes back up about to the high, just over 13.5. Nice little cup, pulling back, lighter volume. Not a real heavily traded stock. That's one thing to consider, but certainly a stock that's been very strong, although this week we've seen the pullback. Redfin Corp also has pulled back from the high last week, but it was overbought. Pretty nice looking charts for the most part as we go through here. CBL, this one is the opposite. Now, this one was downtrending, and when we look on a relative chart, look at CBL relative to its group and to the S&P. This has been a horrible performer anyway, but it's had another bad week to add on to what we've seen in the past. A few retailers that I wanted to mention, Signet, SIG, Signet Jewelers. This, again, if you look at the relative charts on some of these charts I'm about to show you, there's no reason to be in these stocks. They are underperformers within a group that's not necessarily performing all that well. So I think you got to be careful. SIG is certainly one of those. We can pull up EXPR. Look at this, another one that has been on the downtrend, continually trading below its moving averages. Look at the relative weakness. These relative charts are telling you stay away from these stocks. CHS, look at this one, versus the retail apparel group. It's one of the worst ones out there. So, of course, when the group sells off, these are just going to get sold off even harder for the most part. So CHS continues to be weak. Last one I wanted to show you was Urban Outfitters, URBN. Now, this one started to show a little bit of strength, but the pullback has been on big volume. This was not light volume like I was showing you on the cup with possible handle on the REIT stocks that I just showed you. We had light volume pullbacks. Here's a heavy volume pullback. If I bought it, I'd have a very tight stop. I would not want to get caught in the stock if it loses its 20-day moving average. All right, I'm going to turn it back over to you, Mary Ellen. Feel free to
You
go
bet.
longer because I just took a couple minutes to share that story.
Oh, no worries. So this one that we're going to be looking at now is in the beleaguered healthcare services area, and these stocks are continuing to get hit. We're looking here now at United Health Group, UNH, and the stock is just getting clobbered. Take a look at this hit here. It's down another 4%, bringing it to about 8% for the week. And it's all about perception. And with this break in these healthcare providers, we can use UNH as an example, started here in March and then accelerated again in the beginning of April, and it was all about the fact that there is uncertainty surrounding the Medicare for All bill that had been and continues to be brought to the forefront. So there's a lot in the way of political risk surrounding these Medicare related companies that are looking for drug rebates and so forth. So what's happening here is that a lot of these stocks are getting hit. We can take a look at at Humana, which is also in the same space as United Healthcare. And we can take a look here also getting hit. This is that whole period of this uncertainty that's surrounding the potential reduced Medicare benefits, which would, of course, reduce their ability to provide coverage. So what we can look at here technically is the RSI is now below that 50 and is remaining below that. The stock is below these key simple moving averages, which are now very much in downtrends. These stocks are not touchable. And I do recall when this breakdown first started occurring, a lot of analysts were saying that the bill will never pass. You can buy these stocks. I know from my work, I was saying steer clear. Because it's not about whether the bill will pass or not. It's about perception. It's about uncertainty. So in essence, it is sentiment that is driving this. Certainly not earnings. The numbers still look quite strong for a number of these. This is another example, Anthem, ANTM, and it is really getting clobbered. This one had held in because they were not so tuned in to the Medicare, but more recently, sentiment is hitting pretty much every name in this space. This stock's now down 12% for the week. One last one in this space is Molina, MOH. Take a look at this one. And this is another one that really had held in quite remarkably well until it didn't. And it's now part of the group. So it too is getting thrown out with the bathwater, down almost over 8% on the week. It is still finding support at this upward trending 200-day simple moving average, but in essence, the dynamics do not support putting money to work in this space. Let's take a look at another area that has really been languishing here of late, and that's going to be the pharmaceuticals. Now, the first one is going to be related to a spinoff, but it's worth noting this is Novartis. NBS is the ticker symbol. This gap down here, the company spun off their Alcon, and the value of the company dropped. So it's continuing to deteriorate. When you see this huge volume, stock breaks that 200-day simple moving average, your RSI trends negatively. Oftentimes there will be further downside, as we've seen here, with continued volume. These could be institutions that need to and want to reduce their positions. Other names that aren't down nearly as much, but are just languishing. This is Merck, still finding support at this upward trending 50-day simple moving average, but over the near term, your RSI is trending negatively and your MACD is poised to turn negative. But we can take a look on the weekly, and we're still in good standing here on the weekly. So for those that are longer term investors, you can stay with it. But certainly near term, it is showing a bit of a shift. And one last one, and we'll move into another area, and that's going to be Pfizer, another big pharma, also exhibiting this little bit of a breakdown. RSI still finding supported and upward trending 200 days. So again, longer term, you're in good standing, but over the near term, it does not. It looks weak. Chinese stocks now, the Chinese stock market has recovered quite a bit, certainly from its last fall, this bear market period, and we can see that overall the Chinese stock market is in good standing, but there are a couple of well-known names within that market that we can take a look at here. This is Baidu, B-I-D-U. Some of you may be very familiar with this company. They are actually very big in the gaming industry there. They did have a nice move here in line with the broader markets rally, but it's falling back, and it's because analysts are downgrading it. There's an expected increase in capital expenditures. Baidu's getting into video, cloud computing, other strategic areas, and analysts are downgrading it. Let's take a look at LFC. This is another Chinese it's an US ADR. Not a lot of volume here, but it is breaking down. The stock did come out with earnings here, and it rallied despite very poor earnings. So I think it's finally meeting its finally coming under distribution as analysts maybe are reanalyzing that report. And one other name in the Chinese market that we can take a look at here is China Eastern Airlines. And it's really more than anything just pulling back. The stock had a big gap up here last week, and it is giving back some of that. So, but the uptrend is still in place. Let's move on to some of these biotech stocks. And actually, I have time. I'll just show one because we are going a bit over time. I'll just show one of the bigger names in biotech to give you a sense. The overall group is down this week. This is Regeneron, and we can see that the stock is breaking down. Your RSI is below that 50, and the stock is poised to break below that 200-day simple moving average. Take a look at this volume, implying further potential downside ahead. MACD already is below that net neutral 50 in negative territory. And well, I will just show this one, and we're going to review this further later on, but this is Biogen, and they're continuing to have difficulties as far as trying to rebound from that huge drop. So Tom?
Yeah, I would just add too that Biogen, if you've looked at today's poll, that's going to be one of the 5 stocks that we're going to be looking at again here shortly when we get into Technically Wrong, into that new segment. But that one, along with General Electric, Kraft, and a couple of others, are stocks that have obviously been beaten up pretty badly, either in 2019 or maybe for a lot longer in the case of General Electric for sure. And so the question is, which of those companies that have really been beaten up would you be most comfortable holding longer term or owning longer term? So definitely take a look at that, because we're going to talk about that at the end of the show. But for now, what we'll do is we'll get into the 10 in 10. Well, there's your summary slide first of the areas of the market that we just covered, the what's hot, the what's not. Many different areas you can see that were covered. It's amazing, but we did get through a lot in just 30 minutes. And so let's move on to the 10 in 10. And I'm going to start with the first one. I know this is one you just covered, Mary Ellen, but Anthem. And yeah, I mean, it's in that healthcare provider space. And I just highlighted the things that make me very nervous about owning the stock. Obviously, the move to the downside this week has been brutal, more than 10%. And we did go down and went just below 250, as you can see. And that is an area where we have seen buyers come in before. So maybe value investors might look and say, well, you know, this is a nice sell-off. We're down closer to a support level. Maybe this is a good time to get in. I don't like all the distribution taking place. So if we did fail to hold around 246, 248, that would probably be enough for me to get out of the stock if I owned it. I don't like what's going on in the healthcare provider space. I don't like what's going on all of a sudden in the relative weakness of ANTM relative to its peers. It was one of the best ones, one of the best stocks in the group until early March. And literally last 5 weeks, this thing has been just rolling over and moving quickly lower on a relative basis. And relative to the S&P, because the group's been weak and this is a relatively weak performer, we have now moved down to about a 9-month relative low on ANTM versus the S&P. And all of it has taken place in about 6 weeks, which is just brutal. But again, here's your healthcare providers relative to the S&P. I'm just not seeing anything here that suggests to me that I would want to own the stock. other than maybe a dead cat bounce off of this support area just below 250, I don't personally see anything here that I like on ANTM, so I'd avoid it.
Very good. The next one we have is CVS.
All right, and CVS is another one that's not been very strong, and it's one that, well, this is the most popular in the chat room today. But look at where we were. We had a double top in play, really almost a triple top at 80 bucks in the end of, or at the end of November. 80 bucks. Now we're at 52 and change. That is pretty substantial. I mean, that's 1/3 of the company's market value that is gone in just 3.5, 4 months. That's pretty tough to swallow. I mean, think about how long the company's been around, and to lose 1/3 of the market cap. Don't think of it as just losing $26, $28. 1/3 of the company's valuation gone in 4 months, and a lot of it is on some very heavy volume. I think this is indicative of institutions bailing on the stock. Don't like what's going on. I think off of this downtrend, we have equal lows, lower highs. We've got a descending triangle or a flag, bear flag, depending on how you want to, what you want to call it, how you want to look at it. Neither one is good, though, and a breakdown would confirm this bearish pattern. So watch that 51.5, 52 area. I think if we close below that, the volume's strong. I think we got another leg lower coming, so be careful with CVS. I could go ahead and just show you that quickly, what I was just referring to. Here is your downtrend. Well, the whole thing's been a downtrend over the last 4 months, but there's clearly a flagpole to the downside. And then if we just go in and highlight the lower highs and the equal lows coming across here, you will see that descending triangle that I'm referring to. So this is a bearish development. Until I see something positive coming out of CVS, I would avoid it.
Okay. The next one we have is GBTC.
All right, GBTC, Grayscale Bitcoin Trust. Well, we don't need it on the relative chart. I kind of like what's going on here. This is an area, the Bitcoin, where we saw just a huge run up. I'm going to go back a couple of years. Had the huge run up, then we lost a lot of the value, and now the downtrend has ended apparently, and is starting to trend higher again. Now, and the volume has come back in. So I would just say that at least on a short-term basis, it looks more of a technical buy to me. And I would just, maybe draw something along the lines of that. It looks like we went back, tested it, and then broke out again. Now we got a rising 20-day moving average. So I think what I would be watching is just to make sure that this is acting like it's in an uptrend. And what I mean by that is when you're moving up with that PPO above the center line, you pull back, you should hold the rising 20-day moving average. So if I was looking at this as a possible investment, where to enter, I would be looking at that 20-day. If we were to pull back below $6 again and get close to that 20-day, that's where I would look to enter. And then I'd want that to hold because we were in that longer-term downtrend. Wouldn't want to get caught back up in that again. But yeah, short-term things definitely have improved here.
Very good. And here's one in honor of the Masters, ELY.
Oh, Callaway.
Yeah.
Yeah, well, I'm liking the Masters a lot more than I'm liking Callaway at this point. It looks like maybe it's bottomed, but, we put in a little, there's the reaction high, higher low, higher high, higher low, and now we're moving back up. So, but it hasn't been a very robust move to the upside considering what the overall market is doing. And look at how far we are from that October high, whereas the S&P 500, as I mentioned near the top of the show, is now within like a 1.5% of its all-time high. So this one's not really coming back with the market. So that bothers me. So I think as long as we just kind of sit down here, I'm going to draw that right in there with that gap resistance because I think that's going to be a huge level to try to get through. Until we can get through that level, I think I would look elsewhere. Not really a big fan here.
Okay. And then we have Qualcomm, QCOM.
All right, Qualcomm's been a disappointment. I think clearly some overhead resistance, reaction highs are holding the stock back. Actually, let me get out of this and shorten this chart. Don't need to keep doing these 2-year charts. Let's move into the, let's just do a 1-year chart. Okay, so Qualcomm, when you look at Qualcomm, I think the big gap down back in November and then that reaction high continues to be the problem here. So here was the gap down. We actually got up intraday to about that 59 level, and then you can see the gap up here in the failure. So I think that, along with the top of gap resistance, is going to be an overhead area to watch on Qualcomm. As long as it just sideways consolidates or even moves into this area, I'm not going to be interested. I want to see volume come back in and a close above 62. Until we see that, I think there are other areas to be looking than Qualcomm. So I'm going to pass on it.
Okay. Another one for you, Tom, GOLF.
All right. I know this has got to be in honor of the Masters, which I love. Cushnet, another one that I would struggle with just because it's not really reacting anywhere. It hasn't gotten back anywhere close to the late September high when we had that double top and then started selling off. Had a nice move into February, but we're actually still trading below where we were 6 weeks ago while the market keeps going higher. So if I pulled that up on a relative chart, I think you probably would see that the relative strength of late right here relative to its peers and relative to the S&P is what is really bothering me with the stock. So it's just not participating. And I think for those reasons, I would avoid it. But if I, again, was annotating, I would be very concerned about that and about this. I mean, versus the S&P, we just a week or two ago hit our 52-week low relative to the S&P 500. That is not a good thing. And as we start to move higher, we got issues. I mean, we've got multiple levels that we're going to have to try to clear going back forward. So this one's got a lot of work to do. I'm not interested in waiting for it. So I would look again elsewhere for different investment, different trade.
Okay. And then we have KR.
That is underperforming its peers and underperforming the S&P 500. It appears maybe we're starting to roll back over again. And those are the two key areas that we need to try to get through, along with the 50-day moving average. So it's been a good week. If I was in it, I'd actually use the strength to sell into it. And I would wait and see if we can get back up above those key areas and that 50-day moving average.
Very good. Then we have IR.
All right, Ingersoll. All right, IR. Yeah, I like this one. Already can tell. It is in the industrial machinery space, which has been really strong in 2019 so far. It's one of the top performers in the space, and you can see as a result, it's outperforming the S&P 500, and the group is trying to break out to a new high. So this is completely different than a lot of the stocks we just looked at. So here, I'm going to use the blue because that's more bullish for me. But when I see this stock going up, group going up, relative strength has been very strong relative to the group, also relative to the S&P. And you can see over the past several months, the group is rising. These are the kinds of stocks that I'm interested in. So I like the stock as far as, it's probably a little overbought. If it were to pull back to this area, or maybe even there's a little gap area about 108, 109, I think anything back into this zone is where I'd be looking to enter on a pullback.
Okay. Then we have ETN.
All right, I think we got two more. ETN. Oh, Eaton Corp. Yeah, this one, I'm going to actually pull this up on a regular chart. I think this could have negative divergence. It does. It keeps going up, and the volume's been dwindling. So it's telling me the volume by it dwindling is telling me momentum is slowing. And then also you got higher prices with a lower PPO. So I am a little nervous to try and jump in here on this stock, given the signs anyway of slowing momentum. So here was the high on the PPO, and you can see that the PPO is much lower now. Here were the price highs, and you can see price highs keep going up, PPO keeps going down, and the volume keeps going down. That's just not a good combination. So I think I'd have to wait and maybe see if we get a pullback. I mean, overall, it's not a bad stock. I just think it's maybe gotten a little ahead of itself and use a little selling. And if it did, and certainly if it got anywhere close to the 79.80 area, I would like it a lot better.
Okay, the last one is EPR, a REIT stock.
Okay, EPR, Entertainment Property Trust. Let's pull this one up on a relative chart. All right, yeah, really good looking industry group. The stock has been strong. That, of course, means it's been strong relative to the S&P, and the group's been strong relative to the S&P. So I got no problems with this one. I think this looks good. So then the question becomes, where do you get in? And I would be looking for a pullback because that's what I always look for. I think 75 would be an interesting area if it were to pull back there. Literally, I mean, you could use a 20-day test as a short-term level. If you go back, you can see that for the most part, that 20-day moving average has been holding. So maybe a couple of entry points, maybe 20 days of first entry, and then price support down closer to 75 would be a second entry, and then use maybe below that area 74 or so as a stop. And you can keep your stop fairly tight here. But I like EPR. I think it's a winning stock in a winning area of the market. So no problems whatsoever there. And that is the final stock in the 10 in 10.
Very good.
Yeah, so I'll tell you what, before we get into our final segment, let's get into a final market update. And in order to do that, I think what I'm going to do is just make sure everyone is completely aware from the homepage, from your dashboard, how you can use the member tools over here to just quickly go in to the sector summary. Now, before I do that, you can see the Dow back up near the high of the day, 250 points. It's definitely leading on a relative basis. No doubt that the banks are certainly helping the Dow. And if you're wondering why NASDAQ is underperforming on a relative basis today, the bank or the financials are not really represented in the NASDAQ. You have some financial administration stocks, but you don't have banks and so forth. And many of the insurance companies are not in there as well. So the NASDAQ, especially that NASDAQ 100, underperforming because of the lack of representation of the financials. And I showed you earlier, and I'll show you again here under the sector summary, financials are leading the market. So if you've got an index that's not does not have representation by a leading part of the market, obviously it's going to underperform. So that is the big reason there. But look at financials. Financials up 1.74% today. If we pull up the chart on the XLF, we're trying to get a big breakout. This is big. If we go back over the last year and pull this chart up, you'll see that we've had many tests at this area since breaking down in October. Every reaction high has ended at about 27 and a quarter. Today's high, 27.33, currently 27.11. This is the battleground for the XLF. We've got to get through this 27 and a quarter area. And remember that the financials are one of the 5 aggressive sectors. And these are the 5 groups that tend to outperform the S&P 500 during bull market rallies. The financials have not been strong, mostly because of the declining 10-year Treasury yield in 2019. So on a relative basis, you can see on an absolute basis, we've risen off the December low. But if I go in here and I show you the relative strength, and we don't need a candlestick chart, but let's get a solid line chart, and we look at the same chart on a relative basis, you can see that just recently, a few weeks ago, we broke to a new relative low. So yes, financials are going up, and this gets back to a poll question we had, I think, a couple of days ago, or maybe it was yesterday, where we said, is it more important to have relative strength or absolute strength? I think this is why relative strength is so important. Yes, financials are going up, but if you've been in financials, you've probably been lagging the S&P 500 because the group has been a relative laggard. But that seems to be changing, and if it continues to change, this is a group we want to continue to watch and focus on. What I would want to see is I want to see the XLF relative to the S&P. I want to see that PPO go back positive. We have been now in negative territory for over 2 months. If we can get back on the positive side, I think that would be at least the start of something more positive for the financials. All right, and that is it for the market update. So we are going to move into our final segment, which is Technically Wrong. That's the name of it. Not that we're technically wrong. It's a segment that is technically wrong. And as I explained at the open, what this segment is taking a look at, we're going to take a look at some stocks. Actually, Mary Ellen's going to take a look at some stocks that have some really strong fundamentals, or at least their fundamentals seem to be a lot better than the price action on their chart. So the question, I guess, is, are these stocks showing maybe wrong signals technically? Should these be stocks that we are considering as we go forward? So, Mary Ellen, I'm going to let you, really get going on this. But the first stock that we do is going to be Biogen, which is BIIB. And again, I want to just remind you that is one of our poll stocks today, along with 4 others. And complete that poll if you haven't already. We're going to talk about that after the end of this segment. But Mary Ellen, what are you seeing with Biogen in terms of fundamentals, and how is that lining up with the technicals?
Well, interestingly, with Biogen, analysts this week have revised their estimates higher for 2019. Now, the numbers aren't explosive. It is a 10% year-over-year earnings growth, but remember, this is a very big company, so 10% is quite good. And but we can see this gap down. For those of you not familiar, this is all about the company's decision to stop their phase 3 clinical trials for Alzheimer drug that a lot of people were super hopeful for, and the stock absolutely just cratered and had a huge gap down here. We can see that the stock is investors are kind of bottom feeding. They're trying to come in and potentially on the upgrade. But overall, the stock is technically unsound. We can see that this RSI is down here below 50. It's not an attractive chart. One thing that we can do, I like to do this to go back and look at other stocks that had similar big gaps down and see the process for their turnaround. And what I'm taking you to here is Facebook. This is back in the end of July. We can see that big gap down on the security breach. The stock had a similar bottom feeding, people trying to bottom fish, if you will, but the stock had a lot more in the way of work to do before potentially turning. We're just now in April, potentially coming out of the woods, so to speak. You're going to want to see the stock's price break back above these key simple moving averages. Even back here could have been the beginning of this reversal, and so on. So,
all right, another one I've got for you is Green Dot Corp, GDOT. Now, this is a stock, if you look back on their chart, 2017, this thing went crazy to the upside, continued through more than the first half of 2018, but now, after reaching a peak back in November, had fallen about 40% in 4 or 5 months. What is what are the financial fundamentals saying here?
Yeah, you're absolutely right. This is a weekly price chart, a big winner in here. This is a financial payment processing company, and the stock is very much tied in. Apple Pay, for instance, they're in the forefront of fintech, but the stock has fallen out of favor here. This particular drop more recently was on earnings. They came in with disappointing numbers, but analysts are revising estimates for 2020. They're looking for 15% year-over-year earnings growth. And so the stock also had an analyst upgrade this week. They came in and put a $75 price target on it. It's at 62. And prior last month, there was a $90 price target put on the stock. So analysts have faith in this stock that it will potentially turn, but technically we are just not there yet. It's going to have to break up above these key simple moving averages. The MACD is not quite positive, and your RSI is just trending here at this neutral. So it needs quite a bit more. Yeah.
Yeah. Well, you mentioned that that analysts are looking for about 15% year-over-year earnings growth. Is that what you said?
That is right. Mm-hmm.
Okay, because their PE is almost 30, so that's more than twice, the earnings growth rate. So, is that a problem? I mean, do you think that's a problem fundamentally? And again, this isn't something we normally talk about on the show, but
right.
Are the fundamentals just trying to kind of back in line with the technicals or vice versa?
Yeah, we talked about the PE right now is at 19, and the 5-year range. Earlier we looked at that big growth. We go back onto this weekly chart, if I can pull it up quickly here. And during this high growth period, the PE got up to 30 times. And that is what happens. Your faster moving, higher growing stocks are going to command a higher PE. So relative to historical standards, we're almost half what it was at its peak. in PE, which was back at the third quarter of 2018.
Okay. All right, well, let's move into Centene Corp, which is CNC. This was a stock back in August that was trading at $75. And actually, I think double top there back at the beginning of December and has had a tumble recently, last couple of months now, all the way back down into the low 50s. So we're, again, talking about a stock losing almost 1/3 of its market cap in the last 5, 6, 7 months. What do you see here? Are the estimates going lower?
I see an ugly chart, but no, this is another one that's surprising where their analysts are revising estimates. They're looking for 20% year-over-year growth for this year, but next year they're revising the estimates up to 14% year-over-year growth. So the numbers are there. The stock, this is all about the managed care and the recent demise of these healthcare providers with the Medicare for All bill. So it's just, this was this broader market break, but over here more recently, it's all about broader market sentiment surrounding these healthcare providers. The fundamentals are quite sound, and as I said, they're raising estimates for next year. It's just, we have to have a sentiment shift, if you will.
Yeah, and it also looks like maybe right there toward the end of March on that big volume gap down where you have that hollow candle at the very bottom. That looks to me like maybe it's exhaustive. Right there.
Yeah.
The volume that came in was over 30 million shares, which when you go back and look in history, you don't see too many days like that. And off of all the selling that's taken place, maybe that was the end of the selling. I would certainly think that $50 level is going to be very important technically for the stock
to hold. Very good.
Yep. But yeah, it seems to just be the baby getting thrown out with the bathwater in the healthcare providers group. I mean, all those stocks have been beaten up so badly. All right, let's move on to the airlines. And one of the stocks that I love the ticker symbol. And this one, it's not like it's been beaten up horribly, but it just hasn't really done that much. And this is Southwest Airlines, LUV. The stock was up at about $63, $64 in September. Now is trading down at about $53, $54. What do the fundamentals look like on this one?
Yeah, now this is a company that, of course, is in the airline space, and this is another one where analysts are revising estimates higher into 2020. The company came out with earnings, and they were constructive. Let's take a look. That would be back here. This is their earnings gap up, but more recently, it has fallen a bit out of favor. Certainly technically it is trying to turn here, but again, the numbers, they came out and announced that they're grounding their 737 MAX Boeing jets, and it's really played havoc with their scheduling. They've had to do a lot in the way of shifting, so that's kind of kept this stock down a bit. But going forward, the estimates are being revised upward. They're on track for record earnings this year and next year. So fundamentally sound. At some point, we would like to see confirmation of this positive RSI, MACD poised to turn positive. We just need to get this price back up above this 200-day simple moving average to get things going again.
All right, next one up, CBS Corp. And again, this one is similar to Southwest Airlines, LUV, in that it's kind of been going sideways, really is not that far off its high. But when you consider that the broadcasting and entertainment group overall is absolutely on fire to the upside right now, I think you could look at this and say this has been a tremendous laggard, especially on a relative basis. Is there any reason for it in terms of?
Yeah, absolutely. I mean, we can very quickly just take a look. Disney's in that same space. WWE is the World Wrestling Federation. So when we look at a CBS, it's in this media space. This is all about programming. And while they do have a couple of hit shows, overall they're not as innovative. When you look at Disney and the big price breakup, it's all about streaming media. That WWE is the World Wrestling Federation. They have a huge fan base that they are feeding constantly into, but CBS is a little bit more old school, is certainly as far as their delivery. They're being outsmarted by cable. But the stock is trying to turn here, but analysts are revising their estimates lower for this particular company. But it's on track to report record earnings this year and next. So they're looking for $5.65 and $6.56 per share next year, but certainly not the winner as much as looking at the other names that are in this particular group.
All right, we're going to move on to banks. Of course, a number of the banks reported this morning, some of the bigger ones. We're going to look at a really small one here that has not been performing very well, FSBW, which is FS Bancorp. It's come off that December low, like just about everything has, but really looks to me like it's trying to roll back over again, even though we got some decent reports in the space today. The stock is down 1.3%. What do you think here?
Yeah, so what I'm going to do, and this stock does have a nice 1.2% yield, but let's take a look, because what we're seeing as far as the rallying, it's in large money center banks and some of these super regionals. I'm going to pull up KRE, which is the regional banking ETF, and we can see that it has been trying to reverse this downtrend here. It's having a nice rally today, but overall, this what we are looking at with FSBW is very similar to what you're seeing in many of these regional banks. They are having difficulty as far as reversing from this peak in price back last summer. They have been suffering quite a bit, and we can see technically it's not looking very sound at all, but it is on track for 19% year-over-year earnings growth this year. The stock, as far as the earnings releases recently, have been very strong. They came out with numbers at the end of January, and their numbers were 40% earnings growth over last year. Very, very healthy growth numbers, but overall, a lot of these regional banks are in a very similar position.
Okay. Well, we're going to stick to banks, and we're going to go back to the larger one, Wells Fargo, WFC. I looked at this one earlier. I don't like what's going on here at all. The heavy volume selling, moving to multiple month lows here, and the banks over the last 2 weeks have been outperforming the S&P 500, while Wells Fargo completely falls apart to the downside. What's going on with Wells Fargo?
These guys came out and they reported pretty decent numbers, but management came out and they talked about their income from interest. Their interest income outlook was weak going into this year and next, and that really spooked investors. It got them jumping out. Analysts are lowering their earnings estimates for both this year and next for Wells Fargo. This is a company, too, that has an image problem with their lawsuit as far as creating fake accounts, and so it has that going against it as well. But more importantly is the outlook is not promising for this particular stock, certainly as compared to some of these other super regionals and bigger banks.
Completely agree. All right, I'm going to steal the screen from you for just a second, and then you can take it back and give me your thoughts. But I'm going to move into technology, and here's a company, Netgear. Now, you look at the stock, you say, okay, well, it's an underperformer. Obviously, hasn't really been doing much. It set a high back in early February and it's been trending lower. But that's only part of the story here. It is in the telecom space, and you can see that the telecommunications area, we have been on fire in this area in 2019. This has been one of the best areas of the market. Look at it relative, the peers, Netgear's peers relative to the S&P 500 have been moving straight up in 2019, and look at what Netgear has been doing relative to the S&P and relative to its peers. It has been an absolute horrible performer. So I'm going to let you have the screen back and tell me what the heck's going on here with Netgear.
Oh, sure. Let me just go ahead and put that ticker symbol up. Yep, Tom, you're absolutely right as far as this group being on fire. Let's take a quick look. This is Cisco in the very same networking space, and then ANET is another big winner in the exact same industry group. And the numbers are really...
Your screen's not up.
Oh, sorry about that. That would help.
Yep. Just wanted to make sure before you got too far.
I know. Thank you. Okay, so here's Netgear, and I'm just going to go ahead back over to here, and we can do a quick peek at Cisco and ANET. These are two companies that are in the exact same networking space, and more importantly, their numbers are very similar as far as fundamentals, but Netgear is just not making the cut. We can see it's deeply underperforming, and it has everything to do with the two, Cisco and ANET are both in the 5G networking. That's their push. Netgear has some skin in that game, but they're still, a lot of their work is with gaming. So it appears that the company focus is not in the proper place, but they are on track for 28% earnings growth this year, 15% next year. Big growth numbers there. But when I try to look up analysts' thoughts on it and get some kind of background, there's really not a lot of Wall Street firms are following Netgear. So it's kind of a forgotten child within the industry group.
Okay, one more, and I'm going to go back, kind of go back into the banking space. This is one that really has struggled as well. Western Alliance Bancorp, WAL. This is, like I said, this will be our final one, but looking at this stock, it's just been a real underperformer in the banking space for quite a while. Any hopes here?
Well, another one very similar. If you look at that regional bank, this is a regional bank, and analysts are unfortunately revising estimates downward for this particular, down into the single digits. And when we see this type of downtrend that is lasting for a significant period of time, 7 months plus, it's going to take time, of course, to eventually reverse it. But we are seeing hope in the sense that its stock price is broken up above this 50-day. We do have a positive RSI, your MACD just poised to turn positive. So at the very least, from this 44.5 up to 49, we could see a move before potential resistance.
All right, sounds good. Well, it is time to wrap up. So let's go ahead and get that summary up of what we just talked about. I actually enjoyed that segment, even though, you know, we normally don't spend a whole lot of time looking at companies that are struggling from a technical perspective. We focus a lot more on what's working than what's not working, but gives everybody a little bit of something to think about as far as marrying some of the fundamental information that you gave to what's going on technically with some of these stocks. So let us know in the survey if you like the segment, and if you like it, we'll definitely bring it back. But yeah, let's go ahead and go into that poll for today. I mean, this is one where, you know, if we're going to talk about value, I mean, this is a group right here of stocks that have been really beaten up and have underperformed, certainly in 2019, and maybe even quite a bit further than that going back. How about you, Mary Ellen? Are there any on this list that have your interest?
Yes, this is not a pretty list. But I would, if I had to, I'm a fan of ABMD. The stock was a big winner going back historically, but they're on track for big numbers this year, and it's still, actually, I don't even like that one. Sorry. Oh, nuts. This is not easy. Oh, dear.
You don't have to. You don't have to.
Yeah. This is a toughie. Because that NOV is certainly turning. We talked about that earlier, and there's sound reasons for these equipment stocks. They're moving into, well, I won't get into it, but NOV. I'm going to change.
You're going with NOV. I am going to go with ABMD. And I agree, you know, you look at all these charts, and that's the whole purpose of this poll. None of these charts look good. But the one thing I like about ABMD is that it's part of the medical equipment group, which has been very strong relative to the S&P 500. So the other thing, technically, if you looked at a longer term chart on ABMD, is you've got some lows around 275 at the end of last year, and we're back down close to that area. Maybe we pull, you know, through here. But anyway. All right, time to run. Certainly want to thank all of you for being with us today. Please remember to complete the survey as you exit. As I mentioned, I'd love to hear what you think of Technically Wrong, that segment we did today. See if you like that. If you want to complete that survey, it's located below your video player. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Friday afternoon, everybody. Have a safe weekend, and hopefully we'll see you back here on Monday. Happy trading.